$73 a barrel. That's minus 30% in 4 months. That means the revenue from the sale of oil for OPEC countries is falling. And together they produce more than a third of the world's oil. They'll decide whether or not to decrease production to try and increase the price. So let's try and make sense of this. First of all, with the business angle, Stephen Carroll, our business editor, is here. Stephen, good morning to you. First of all, why have prices fallen so much so rapidly?
Well, the main and obvious reason is oversupply. There's more oil on the market now, and that's largely down to the huge explosion and extraction of shale oil from the United States. In fact, the US could be set to become the world's biggest oil producer by next year on current projections. Now, while that's been happening, OPEC has been keeping its production steady for the past 3 years. So you've seen more oil available on the market, and that is driving prices down. At the same time, the economic downturn, particularly in Europe, means that countries are using less oil. There's less demand for it, and as a result, that's not helping prices either. If you look at what's happened since June alone, it's come down over 30%. That red line you can see is the $80 a barrel line. That's kind of seen as that once it goes below that, they need to kind of do something about it. That's certainly how a lot of the OPEC countries feel. And that oil price now has gone below, as you were saying, $73 a barrel at the Texas benchmark.
No, of course.
To increase prices by reducing that supply, or they can simply leave it as it is. But within OPEC, there are divisions about who wants what out of this, and that's because the different countries that make up the OPEC group of nations have very different levels for what they need oil to be sold at for them to be able to balance their budgets. If you look at the likes of Iran or Venezuela, it's much higher than it would be for countries like Saudi Arabia. For Iran, it's around $150 a barrel. For Saudi Arabia, it's somewhere around 80. The argument that Saudi Arabia is making, or that's what we understand that they're making anyway, is that they should leave things as they are because they want to wait and see if the global economy will recover, playing a sort of a line between the amount of oil that's available on the market, the price of oil, and how economies are doing. So they're hoping better global performance in growth will mean more oil.